Hello everyone. Welcome back to Educator Guru YouTube channel. In my previous videos, I had posted question and answers of the first PUC model question paper of section A, B and C. In this video, I'll be going through taking you through the important 1 mark and 2 mark questions on each chapter from previous year annual examination question papers of accountancy. Now let's go through one by one. Chapter 1, Introduction to Accounting. The first question goes like this. Accounting begins with the identification of transaction and ends with the preparation of dash statements. So the answer is financial statements. In accounting, we start entering the transactions by recognizing to which account it belongs to, and we record it in the respective books and post it in the journal, ledger, and then to the financial statements like profit and loss account and balance sheet. Next question. Recording is made in a chronological order. So date wise, we'll record the transactions in every business. Next, state any two users of accounting information. I have given 4 users list. You can choose any two and write in the examination. At management level, chief executive, investors, creditors, and tax authorities. What is capital? Answer. Amount invested by the owner in the business is known as capital. It may be brought in the form of cash or any assets. Accounting measures a business transaction in terms of monetary units. This we have already discussed in our previous videos, that accounting transactions are always recorded in monetary basis. So the business transaction is based on the monetary units, which will be helpful for the financial analysis and performance of the business in the future. Now, define accounting. I've given 2 definitions. You can write any one at the exam. According to American Accounting Association, accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users' information. Or you can also write, according to the American Institute of Certified Public Accountants, accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of a financial character and interpreting the results thereof. Next, let's go to chapter 2, theory base of accounting. First one. This is a multiple choice question. A concept that a business enterprise will not be sold or liquidated in the near future is known as going concern concept. The answer is option A, going concern concept. What is going concern? It is believed that the business will not close shortly and it will go on. I mean, it will be in a continuous process and it will be taken for a long period of time. So it is called as going concern. Next, what is double entry system? The system of recording 2 aspects, that is debit and credit of every transaction in the books of accounts, is known as double entry system. For example, you have sold goods for cash rupees 500. Here the cash has come in and the goods has gone out. So here two accounts will be affected. One is cash. Cash account is debited to sales account. This is called double entry. The effect will be on 2 sides, like both debit and credit. Next, a business is a separate entity from its owner for accounting. State true or false. The answer is true. Yes, the owner is different and the business is separate. Here, owner and business are not one and the same for the purpose of accounting. That is why, if you see, when the capital is invested in the business, it is called as liability because the owner has invested and it is our responsibility to pay back to the owner, and that is why it is a liability as per the business. So, it is a separate entity. What do you mean by accounting concepts? Accounting concepts refers to the necessary assumptions and ideas which are fundamental to accounting practice. Next, closing stock is valued at option A cost price, option B market price, option C sales price, option D cost price or market price, whichever is less. So the answer is option D cost price or market price, whichever is less. That you have to apply this concept always while valuing the closing stock. Next, what is matching concept? Matching concept states that expenses incurred in an accounting period should be matched with revenues during that period. For example, uh, in a balance sheet, always the liability is equal to asset. So this is called matching concept. Accounting equation is based on option A cost concept, option B dual aspect concept, option C separate entity concept, option D accrual concept. Answer is option B dual aspect concept. Accounting equation is a dual aspect concept. You can I hope you know the accounting equation. Asset is always equal to liabilities plus capital. That means whatever in asset any one concept, any one account is reflected, the same reflection is there on the capital or liability side. So there is two uh, two aspects here. So that is why it is called as dual aspect concept, two reflections. Next question, expand GAAP. GAAP. Answer is generally accepted accounting principles. Ninth, state any two accounting concepts. Answer, business entity concept, money measurement concept, accrual concept, dual concept, accounting period concept, cost concept, going concern concept, realization concept. I have given nearly 8 accounting concepts. You can select any two and write in the exam. Next, let's go to chapter 3, recording of transactions. The process of recording transactions in journal is called journalizing. It is very as simple as that. Ledger records transactions in option A chronological order, B analytical order, C both A and B above, D none of the above. The answer is chronological order. Date wise, the account transactions are recorded in the ledger, journal and all. Next, state the rules of debit and credit of assets. So it is very easy. Debit increases the asset. Credit decreases the asset. When an asset is bought, it is debited. And when it is sold or depreciated, it increases the value of asset, which is shown on the credit side. Next, what is journal? The journal is a basic book of original entry. In this book, the transactions are recorded in chronological order. Date-wise, it has been recorded. Mention two features of ledger. Answer. I've given 4 features. You can select any 2 and write in the exam. A. It is a book in which different accounts are kept. B. It is a book of final entry. C. It is the principal books of accounts. D. In ledger, transactions are recorded in a classified form. Now, they have asked for an example on voucher. Give an example for voucher. I have given nearly 7 examples. You can select any one and write. Voucher means it's an invoice. So you can write purchase invoice, sales invoice, debit note voucher, meal voucher, travel voucher, cash receipt, general voucher, anything. Or you can just simply write an invoice also as an example. What is posting? Posting is the process of transferring the entries from the books of original entry to the ledger. Like from journal to ledger, we transfer the entries. That is called posting. Write the rules of debit and credit of liabilities. So the answer is like this. Debit decrease in liabilities, credit increase in liabilities. So usually when the liabilities is increased, it is debited, it is credited. When the liabilities is decreased, it is debited. That is why always liability shows credit balance in trial balance. Increase in asset is debited and decrease in asset is credited. True or false? Right. It is true, because when an asset is bought, it is debited. Bought means the asset has been increasing. When it is depreciated or sold, there is a decrease in the value of asset, so it is credited. And asset always shows debit balance. Next, give the meaning of narration. Narration is a brief description of the transaction given below the journal entry. For example, you have made a purchase of some goods worth rupees 1000 for cash. So the entry goes like purchase account debit to cash account 1000 rupees. So just by seeing the entry you cannot understand the details, so in below a description is given, which is called narration. There you'll give a detailed explanation regarding the entry, like purchase has been made from such and such a person for cash or credit. Like this you'll give a description, that is called narration. Next, let us go to chapter 4, recording of transactions, part 2. Rent paid to landlord is credited to dash. A, rent account, B, landlord account, C, cash account, D, none of the above. Answer is cash account. Because when rent is paid, cash is going out of the business or whatever the business or the company. So the cash is credited. What type of transactions are recorded in sales book? Answer, credit sales of goods. Only credit transactions are recorded in sales book. All cash transactions will come under cash book. Goods purchased on cash are recorded in A, purchase book, B, sales book, C, cash book, D, purchase return book. The answer is cash book, because the goods are purchased on cash. If it is credit, then it will come under purchases book. Next, double column cash book records all transactions, only cash transactions, only credit transactions, cash and bank transactions. Answer is option D, cash and bank transactions, because double column cash book comes where there are both cash and bank transactions. One column will be cash, other column will be bank. So the answer is option D. Next, let us go to chapter 5, bank reconciliation statement. Why is bank reconciliation statement prepared? Answer, bank reconciliation statement is prepared to reconcile, that is tally, equate the bank balance as per cash book with the bank balance as per passbook by showing the items of difference between the two balances. For example, you have issued a check of worth rupees 1000 to person A. So that transaction you have recorded in your books, but the person has not presented it. He'll present it after 3-4 days. Then he'll go to bank, he'll make the check present, he'll present the check, and then the bank will record in the passbook. So there is a difference of nearly 1 week. So this difference should be tallied, and that process is called as bank reconciliation statement. That is why this reconciliation is required in every business. Next, what is balancing of an account? As I already told you in the previous question, balancing of an account is the process of finding the difference between the total of debit side and the credit side of an account. Next, what is bank reconciliation statement? Bank reconciliation statement is a statement which is prepared to reconcile, that is tally, balance the bank balance as per cash book with the bank balance as per passbook by showing the items of difference between the two balances. Next, state any two reasons for the difference between cash book balance and passbook balance. I already explained this in the previous slide. So we'll just go through the points now. Answer, checks issued but not yet presented for payment. So when check is issued, it is recorded in the cash book, but in the passbook of the bank, it is not recorded because it is not yet presented. So there is a difference between the bank balance as per cash book and bank balance as per passbook. Next, checks paid into bank but not yet collected. Hope that is clear to you all. Next, chapter 6, trial balance and rectification of errors. First one, trial balance is a statement State true or false. Yes, it is true. It is a statement showing the debit balances and credit balances of all the accounts of the business. Next, purchase of machinery for 25,000 has been entered in the purchases book. Give the rectification entry. So, when the machinery is purchased, the asset is coming in and the cash is going out. So, the entry has wrongly made to the purchases book. Instead of putting to machinery account, they have put it to purchases account. First, the right entry should have to be machinery account debit to cash account, but they have made purchase account debit to machinery account. So we have to reverse what has been debited, purchase. So we have to reverse by crediting it. What has to be debited correctly was machinery account. So we'll debit machinery and reverse the purchase to credit. The entry will be machinery account debit 25,000 to purchase account credit 25,000. This is the rectification entry. Next, what do you mean by compensating error? When two or more errors are committed in such a way that the net effect of these errors on the debits and credits of account is nil, such errors are called as compensating error. I've just given you a small example here for easy understanding. If you add rupees 500 to your expenses and record the same amount in the revenue, then the balance sheet will look equal. There will be no change or difference in the balance sheet, or there will be no errors. This error is also not seen in your books because there is both effect, like in the debit also there is effect of 100, in credit also there is effect of 500, which does not make any difference to your business transactions. Next, state any two methods of preparing trial balance. A, total method, balance method, totals come balance method. State any two types of errors. Errors of commission, errors of omission. Now, give any two examples for errors of commission. I have given three examples. You can write any two at the examination if they ask this question. A, sale of goods to Madan on credit rupees 1,000 but recorded as 100 in the sales book. They have wrongly entered the amount here. Next, cash paid to Mohan on account of rupees 2,000 was posted to Mohan's account as rupees 200. Here also the amount has been entered wrongly. Then, purchase book was overcost by rupees 1,000. So these are the examples for error of commission. Next, let us go to chapter 7, depreciation, provisions and reserves. First one, name any two types of provision. You can write provision for doubtful debts, provision for depreciation, provision for taxation, provision for reserves, anything you can write. Next, what is depreciation? Depreciation may be described as a permanent, continuing and gradual shrinkage in the book value of fixed assets. Nothing but wear and tear of the fixed assets. Next, name any two types of reserves. I have given 4. You can write any 2 at the exam if they ask. A, general reserves, capital reserves, workmen compensation fund, investment fluctuation fund. Next question. What is capital expenditure? Capital expenditure is an expenditure whose benefits extends to many years. For example, fixed assets. You have bought furniture for your business, which is a long-lasting asset for the company. I mean long-term investment. So the expenditure is capital expenditure here. Next, let us go to chapter 8, financial statements. How do you treat interest on capital while preparing profit and loss account? It's very simple. Interest on capital is treated as an expense for the business because the shareholder or the owner of the company has invested the capital. So every year we need to pay the interest. So we are paying the interest to the owner. So that is an expense for us. That is why it is treated as an expense and shown on the debit side of the profit and loss account. Next, give an example for closing entry. For closing the account of sales, I've given example of the sales account here. Whatever the balance shows under the sales account, that is transferred to trading account. So sales account debit to trading account. Under trading account, it is shown on the credit side saying buy sales account and with whatever X amount. Next, state any two objectives of preparing financial statements. Answer: to present a true and fair view of the financial performance of the business, to present a true and fair view of the financial position of the business. Next, prepaid expenses are assets of the business. State true or false. Yes, it is true because the future expenses we have already paid in advance, which is an asset for us until the expense actually incurs. So, till then, it is an asset for the business. So, prepaid expenses are recorded under the asset side of the balance sheet always. That also you should remember. Next, give example for fixed assets. Example: buildings, furniture, land, machinery, motor car, motor jeep, anything you can write. Now, let us go to next question. Give an example for outstanding expenses. Outstanding rent, outstanding salary. You can write anything. Next, give two examples of current assets. I have given many here. You can write any two at the exam. Cash in hand, cash at bank, sundry debtors, stocks, bills receivable, anything you can select and write. So hope this was very useful video for you. If you like this video, please share among your friends and also subscribe to our YouTube channel. And any doubts or queries, you can just post it in the comment. And all the best for your exams. Thank you.